Landon, this obviously is a tough time for companies like Lyft, companies like Uber. But given the fact that Lyft is the true ride-hailing play, ride-sharing play without that food business, we know it's impacted their financials a little bit more right now. But how much has it hurt them also in kind of the war of loyalty, the war of gaining consumers? Right now, am I more likely to log on Uber because I might order food and then remember, oh, I might need to get a ride? We already know they're the verb in the space. Kevin, just a second ago, said Uber when we're talking about Lyft in this segment. I know we said both names, but we can't talk Lyft without talking Uber. I'm not sure we do the same when we talk Uber. And how much is that showing up in your data?
Yeah, I think you're absolutely right. I think it's a huge advantage for Uber, not only in name recognition and customer habits, because like you said, when you order food from them or do other things, you're just getting used to using them, but also in just diversity as a company from their revenue streams. I think that's really important, as this little pandemic has shown us, right? I mean, Lyft is focused on people going out and doing things, whereas Uber has an arm of their business that's focused on people staying inside. That's Uber Eats. And so they've kind of got both areas covered. And of course, no one could have predicted that this was going to happen, but it just shows you the value of diversifying your portfolio and I'm not talking about investment, but as a company, your revenue portfolio. Where does the money come from? And so you never know what's going to happen. And Uber is really more forward thinking, in my opinion. They're thinking about all the different ways down the road that they could make money. And they're really leveraging their brand, whereas Lyft is just sort of sticking to the ride share. Now, of course, what's really important for this quarter is how our revenue is going. They had a huge bump from Prop 22. I think they're up about 13% on that. The vaccine news, they're up about 20% on that. These are not small numbers. And so we've got a huge boost in the share price of Lyft coming in, and they're still far below what they were before the pandemic. I think they're around 50 before the pandemic. They're around 36 now. So even with those two huge bumps, they're still way below. And of course, you can see it on this purchase intent chart. I mean, you can see when the quarantine started and people stopped using ride sharing. Now, what's interesting is that drop from Q1 to Q2 is about a 57% decrease in purchase intent. That quarter, they reported a 65% decrease in revenue. So we're lining up fairly well. So the question to ask is, what about this quarter? We're showing about a 24% increase from that very low one last quarter. So Q3, we're showing up about 24%. Analyst expectations, I've seen a lot of different ones across the board. I've seen some that are kind of averaging around 48. So if you just look at that, I think that there's a good chance they miss on earnings here. With that, and the fact that the stock is very inflated on this really fantastic news for the company, I'm not sure what's going to happen after earnings. If you would have asked me over the weekend, I thought I was pretty bullish on Lyft because this plus 24% on the quarter over quarter. But now that we've got the vaccine news and the stocks rallied 20%, I'm not sure really where analyst expectations are. And frankly, I don't know how big earnings are going to be rather than forward-looking things like vaccine or, like Kevin said, the fact that Prop 22 was passed and that can't spread throughout the country now. So very tough quarter to call. I'd have to lean, if you ask me this weekend, I would lean bullish. Now, I don't know, because we've got a big bump in the share price and the vaccine really is bigger than earnings, in my opinion.